Hello, Viraj.
Hi. Okay, you're all set?
All set.
Okay, perfect.
Hello, sir. Good evening.
Hello, Archana.
First of all, Anmol ji, कहाँ से हैं आप?
Delhi.
Delhi, and what do you do?
So I am into travel and aviation industry. And
अच्छा,
G.
travel. That's exciting.
Yeah. I mean, right now, it has almost been 2 decades that I have been part of this industry.
Oh, wow.
And yeah, and for past, I would say 6 months, close to 6 months, I have been I mean, I left my job 6 months ago, and then I'm
Mhm.
trying to figure out that if I can get into some business or something. So I'm trying to figure out certain projects if I can work on them.
Okay, okay. Within the travel industry itself.
No, anything.
No. Anything. Okay, okay.
Yeah. Yeah.
Perfect. So, Anmol ji, after the webinar that you attended, today is
Hmm.
your first session.
Correct.
And today in this meeting, we are primarily going to discuss two things. One is we are going to look at the assets that come under this portfolio.
Mm-hmm.
We will understand the asset allocation
Mm-hmm.
and how profitability is generated within each asset class. We
G.
will understand how well diversified the fund is.
Mm-hmm.
And then the second part that will be taken by Archana, she will take you through the earnings chart. That is basically your wealth multiplication charts
Mm-hmm.
with the amount and time horizon, and she'll explain to you in detail how the whole calculation works.
Sure.
And in your subsequent session, that is when we will talk about safety, security, and regulatory aspects of the portfolio.
Okay.
Okay, so these are the two main sessions that you need to attend. After that, the third day could be a phone call also. It's basically to clarify your queries, exit, taxation, and all that.
Mm-hmm.
Okay, so what we are trying to understand here is we are looking at the mechanism of why early stage participation into real estate and stocks have the
Mm-hmm.
potential to generate 45 to 250% returns, whereas the same real estate and stocks, when you enter at a later stage, your returns are
Post
limited
IPO.
to 12 to 15% per year.
Okay.
That's what we're trying to understand. Why does that happen?
Mm-hmm.
That's because early stage participation is basically a business opportunity in disguise,
Mm-hmm.
whereas late stage is basically an investment opportunity.
Mm-hmm.
So naturally, a business opportunity will yield 10 to 25 times more returns than an investment opportunity.
Uh,
Did somebody else join?
yeah,
Yes.
hi, Viraj. This is Piyush.
Hi, Piyush.
So Viraj, Piyush is with me only, and we are planning to do the investments together. So
Oh, nice.
I wanted him also to be part of the session.
Perfect, Piyush. Piyush, would it be possible to switch on your camera?
I'm so sorry. I'm not in that position. I'm so
Oh,
sorry for that.
that's okay. That's all right.
Hmm.
So, Piyush, did you attend the webinar or not?
No, this is my
Okay,
first call on this.
no problem. So, before I proceed further, let me quickly bring you up to speed as to what
Mm-hmm.
was discussed in the webinar.
Okay.
In the webinar, we talked about basics. We talked about a fund, a multi-asset fund that
Mm-hmm.
basically follows a 3-year cycle. So it is a fund that has a lock-in for 3 years.
Mm-hmm.
And if you wish to continue, then you will continue for another 3 years. So it basically follows 3, 6, 9 years cycle. Okay,
Okay. 333. Okay.
333, correct. So this fund basically focuses on real estate and equity participation, early stage participation, which is what we are going to discuss in this meeting. Now, this particular fund is an AIF, Alternate Investment Fund, that is basically 100% compliant under the Security and Exchanges Board of India, SEBI. And your participation, individuals like you, Anmol, everyone, and also institutional investors, the participation is carried through a subsidiary company, the technical term of which is SPV, Special Purpose Vehicle. The objective of that company is to purely take your funds, collect your funds, and deploy it into the various asset classes. And this AIF will be merged to this SPV, sorry, will be merged into an AIF. And then it
Okay.
becomes 100% SEBI compliant. So typically, AIFs in India, they have a relatively high participation amount. They usually
Correct.
start at 5 crores plus. If you look at dollar denominated AIFs, it is still higher. It starts at minimum $1 million and above.
Mhm.
Mm-hmm. Mm-hmm.
So the advantage here is that you're getting the same AIF structure, the same safety and security structure, but with a much lesser bandwidth. The objective is to make it reachable for most individual investors because the minimum participation amount starts as low as 25 lakhs. Okay,
Okay. So minimum amount is for 25.
correct. So as per SEBI, the minimum investment requirement in an AIF is 1 crore. But because all the investments is routed through a company, the company is treated as a single entity. तो कंपनी
Hmm.
का पूरा कॉर्पस देखते हैं, इंडिविजुअल का कॉर्पस नहीं देखते. अगर इंडिविजुअल का कॉर्पस देखेंगे तो मिनिमम 1 करोड़ ही चाहिए. अगर आप एआईएफ में डायरेक्टली इन्वेस्ट करोगे तो मिनिमम 1 करोड़ चाहिए ही चाहिए. और वो तो फंड के ऊपर डिपेंड करता है कि उनका मिनिमम टिकट साइज क्या है. But
Got
here,
it. Got
because
it.
it is routed through an SPV, we are able to offer it at a slightly lower bandwidth.
Okay. Okay.
So in today's meeting, we are going to look at what are the assets. कि ये पोर्टफोलियो कहाँ इन्वेस्ट करता है,
Mm-hmm.
कितना परसेंटेज इन्वेस्ट करता है, इसकी प्रॉफिटेबिलिटी का रैशनल क्या है. पहले हम
Mm-hmm.
वो समझेंगे. एंड स्टेज 2 वी लुक एट द अर्निंग्स चार्ट, विच इज बेसिकली कि आपका वेल्थ मल्टीप्लाई कैसे होता है, 3 साल में कैसे मल्टीप्लाई होता है, 6 साल में कैसे मल्टीप्लाई होता है, सिंगल कंट्रीब्यूशन और स्टैगर्ड कंट्रीब्यूशन का फर्क क्या है, वो
Mm-hmm.
हम समझेंगे इस मीटिंग में. और आपकी जो सब्सिक्वेंट मीटिंग है उसमें हम डिस्कस करेंगे सेफ्टी, सिक्योरिटी, रेगुलेटरी एस्पेक्ट्स इन डिटेल.
Okay.
So all your questions you will be asking during your second meeting. All the safety,
Okay.
security, सब आएगा उसमें. ठीक है. So I'll get started. So I was basically telling Anmol before you joined that
Uh-huh.
basically an early stage participation is like a business opportunity.
Mm-hmm.
Late stage participation जो है वो एक investment opportunity है. But the advantage is you are looking at a fund that is set up to generate anywhere between 35 to 250% per annum. But the risk of investing in such a fund is actually lower than investing into a diversified mutual fund because of the regulatory structure involved and because of the diversification involved. So, research has proven that the value of a business increases by 1,000 to 5,000% before the public gets access to it, यानी कि IPO से पहले। और वही बिजनेस अगर आप IPO के बाद देखोगे तो बिजनेस फिर भी बढ़ता जाता है, लेकिन 25 से 100%। So that difference is staggering. That growth that one achieves pre-IPO, and then once public gets access to it, then the growth decreases. So basically, your wealth multiplication completely depends on what stage are you purchasing the asset. कौन से स्टेज पे आपने वो एसेट को एक्वायर किया, आपका रिटर्न्स इस पे डिपेंडेंट है, and that we will examine in detail now.
Okay. Okay.
So in this portfolio, your capital is actually a combined capital. आप जैसे इंडिविजुअल इन्वेस्टर्स हैं, आपके जैसे अनमोल के जैसे इंस्टीट्यूशनल इन्वेस्टर्स हैं, HDFC कैपिटल, LIC कैपिटल, अबू धाबी इंफ्रास्ट्रक्चर फंड और NABARD. NABARD इज नेशनल बैंक ऑफ एग्रीकल्चर एंड रूरल ट्रेड। मेजर चंक ऑफ इन्वेस्टमेंट जो है वो तो इंस्टीट्यूशनल इन्वेस्टर से आएगा, क्योंकि उनका मिनिमम टिकट साइज शुरू होता है 50 करोड़ से 100 करोड़ 150 करोड़ ऐसे जाएगा। जो इंडिविजुअल इन्वेस्टर्स का पोर्शन है वो एक्चुअली काफी कम है, तो इसलिए वी आर नॉट लुकिंग एट मोर देन 100 or maximum 125 individual investors in this particular portfolio. Second thing is, this portfolio has an independent investment banking team backed by an independent investment advisory board, and their profiles have been approved and verified by SEBI, क्योंकि ये रूल है। तो ये पूरा इन्वेस्टमेंट बैंकिंग टीम का डिटेल्स, वो कौन कौन है, उनका बैकग्राउंड क्या है, उनका एक्सपीरियंस क्या है, इन्वेस्टमेंट एडवाइजरी बोर्ड में कौन कौन है, ये सारी डिटेल्स आपको सब्सिक्वेंटली मिलेंगे।
Okay.
द थर्ड थिंग इज दैट द रेगुलेटरी स्ट्रक्चर मेक्स इट वेरी सेफ, क्योंकि जो आपका SPV है दैट कम्स अंडर द गवर्नेंस ऑफ मिनिस्ट्री ऑफ कॉर्पोरेट अफेयर्स, और आपका जो AIF है दैट कम्स अंडर द गवर्नेंस ऑफ SEBI. So also Piyush, in the webinar, we discuss a few case studies just to give an example as to what is the power of early stage participation. So we have given 3 more examples here. Urban company, 57 lakhs maturing to 111 crores. Ola, 50 lakhs maturing to 50 crores. ये IPO की पहले की बात है, IPO तक की बात है। मामा अर्थ जो कॉस्मेटिक्स कंपनी है, 39 lakhs maturing to 40 crores. The point we are trying to make is you are going to get access to the exact same asset classes in this portfolio. And let's have a look. Number 1 is wholesale real estate. What does wholesale real estate mean? Buying and selling city apartments all across India and villas. And villas could be in tourist locations also, through bulk deals. So it's basically identifying a buyer, entering into a tie-up with the builder or a developer and saying that we will sell these units, but on our terms and conditions. So हम वो प्रॉपर्टी को पूरा क्यूरेट करते हैं, उसको फुल्ली फर्निश करते हैं, उसको अल्ट्रा लग्जरियस बनाते हैं। अगर विला है तो हम इंटरनल और एक्सटर्नल काम भी करते हैं, जहाँ पे लैंडस्केपिंग हुआ या पूल हुआ या जो भी जरूरत है, वो ये बायर को आइडेंटिफाई करने के बाद और फिर हम उसको बेचते हैं। अब मैं आप दोनों को इसका एक एग्जांपल देता हूँ। एक प्रॉपर्टी है अलीबाग महाराष्ट्र में, जिसका नाम है वाटर फ्रंट। दिस प्रॉपर्टी इज इन अ वेरी प्राइम लोकेशन, 10 minutes away from Mandua Jetty, and this is where all your film stars, business people, sports celebrities, they have their villas there. So this builder built the first RERA approved 13-story building, 2 buildings on each floor, but it was designed to be a regular residential apartment. Our team identified the opportunity, looked at the location and said that एक तो लोकेशन बढ़िया है, उसके ऊपर से सी फेसिंग है, फ्रंट की तरफ सी फेसिंग, बैक की तरफ लेक फेसिंग है. So we took over and we told the builder, we will sell the units for you, but in return we will complete the interiors and exteriors to such an ultra luxurious level that the price of the property is going to absolutely skyrocket. So this is what we mean by bulk deals, acquiring more than one units. एक प्रोजेक्ट में 5-10 यूनिट्स एक्वायर करके उसको हम बेचते हैं. And this buying and selling happens frequently, multiple times during a year. And that is where the profits are generated.
आप एक प्रोजेक्ट में सिर्फ 5-10 यूनिट्स लेते हैं तो सिर्फ वो कैसे लग्जरी में बिकेंगी? वो पूरा प्रोजेक्ट कैसा है उस पे नहीं डिपेंड करता?
हाँ, मेरा कहने का मतलब है कि पूरा प्रोजेक्ट का इंटीरियर एक्सटीरियर वर्क हम करते हैं.
हम्म
पुणे में एक प्रोजेक्ट था जिसका हमने 100% किया था. कभी कभी क्या
हम्म
होता है कि एट द टाइम ऑफ एंटरिंग कुछ यूनिट्स ऑलरेडी बुक्ड हो चुके हैं,
हम्म
तो वो तो हम कुछ कर नहीं सकते, वो ऑलरेडी सोल्ड आउट है. तो बाकी जो बचे हैं वो हम लेते हैं.
I mean, at the time when you realize
हाँ,
that there's an opportunity and the time when
करेक्ट.
you enter into it. Okay,
It's possible ना that the builder has already sold some units.
correct.
That's why. Otherwise, we will look 80 to 100%
Sure.
sale. But वो chance मिलना भी rare है, because then we have to approach somebody right at the time they're launching the project.
Mm-hmm.
But we usually prefer going towards completion because वो launching में थोड़ा सा risk है. If the project does not get completed on time, if there is a delay, then the capital gets stuck there, na? Then we get stuck there. So it's basically ready to move in properties, mostly ready to move in properties. So to achieve this, we have a network of 500 plus realty channel partners across the country. The second is project development. Project development is designing and developing custom luxury villas in tourist locations, specifically targeted at high net worth individuals. These are premium villas. And again, what we do is, after acquiring the land, we mostly build the villa on a demand basis, identify a buyer first, and then complete the villa project. Which is why we are not doing apartments at this time, because villa में वो risk नहीं है. Apartment में आपको खड़ी
But
करनी
Viraj,
पड़ती है.
sorry, one thing. How your team going to be identified the buyer first and you will buy then and then you will design? Because these are two different things, na?
हाँ, identifying a buyer is easy. If you go to any site like magicbricks.com or 99acres.com, once you have a agreement with them, you know in what location what is the demand and what are people looking for. We also have our backup, wherein we have business relationships with a lot of builders. And builders won't mind, because what we are saying is we'll help you sell these units. They are like more than happy. They are not incurring any additional cost. We are incurring the cost of curating the property. But we know that we are going to recover that cost because we already have a buyer at place, identified first. That's what I meant. So these villa projects could either be gated community projects or they could be standalone also. We have identified opportunities in Kunur, Coorg. There is one coming up in Mashobra, Shimla. And we are also looking at Udaipur, Alibag, Dehradun, Uttarakhand, the coastal belt of Goa, so on and so forth. The third vertical is startup ventures. Now, startup ventures have the potential to deliver 250 to 1,500% returns. However, we are neither an angel investor nor we are venture capitalists. Matlab, we don't invest money based on an idea. Instead, we take a slightly different approach. What we do is we look at sectors mainly. What are the sectors that have consistently performed? And in those sectors, we identify a company where we improve the operational efficiency. And there is a systematic way of doing that. So our objective is to improve, not to invest in an idea, a seed that may or may not take off. Our objective is to look at established sectors, increase the operational efficiency of the company, reduce the cost, and take it to a pre-IPO level.
So which are the sectors right now you have been interested in, and then
Provide information to you. We have a separate presentation for that, and all that information will be provided to you. कि कौन-कौन से sectors they're already identified. We will share that with you. Okay. Because that is where we are different from venture capitalists. Venture capitalist क्या करता है? Idea उसको अच्छा लगा, 100 project में डालेगा, क्योंकि उसको पता है कि 100 में से 95 या 96 startups fail होने वाले हैं. बाकी 3 या 4 जो बचेंगे वो उसमें से कमाएगा पैसा. हमारा strategy वैसे नहीं है. We look at increasing operational efficiency in the existing sectors. मान लीजिए कि अभी manufacturing business अच्छा जा रहा है, तो sector में बढ़िया growth है, future trend optimistic है, उसमें से हम नए कंपनीज को ढूंढ के उनके ऑपरेशनल एफिशिएंसी को और बढ़ा देते हैं ताकि प्रॉफिटेबिलिटी और एग्जिट ऑप्शन क्लियरली हम ईयरमार्क कर सकें. So that's why I said it's a slightly different approach.
Sure, let's ponder over this when if you have a separate presentation over this.
Yeah,
I
we'll
would
send
like to
that to you.
understand. Yeah, okay,
You will receive that, okay?
sure, sure.
The next is small and medium enterprises. We are talking about private limited small and medium enterprises that have been in the market for at least 3 to 5 years. So these are companies that have already shown a consistent growth. The idea is to take them and bring them up to the IPO level there and exiting. So basically, you will enter and make your profits and exit before the public gets access to these. IPO आते ही public को access मिल जाएगा, but उससे पहले the idea is to enter at an early stage and identify the profits.
How
So
is
this is also
how is this different? Sorry, I'm sorry to cut you. How is this different from the first part which you spoke about?
the startups.
Yeah,
Startups would be brand new. These SMEs would be in the business for at least 3 to 5 years. They cannot be considered as startups. They're already in the business, but they are private limited. They have
but
not yet
before,
gone public.
so okay, so the organization, so startups, you said that you would venture into the industry segment, which
Hmm.
has prospects of growing, and then you improve efficiencies, and these are
Right.
the organizations which are already functioning into the same sector or
Not
other sectors,
necessarily. Not necessarily.
but they are bound to go to IPO, you're saying.
Correct. These
And
are enterprises.
how do you ensure and assure that they are IPO bound, or they will come to IPO, or they would continue to work as a private limited entity only?
No, that is based on the negotiation and investment negotiation and structuring with the company management, right? So they'll
So
have a clear path,
you
and
get into.
even if they don't go to the IPO level,
Mhm.
the valuation of the company itself will increase, na? The profitability is increasing.
Okay.
So
So
our objective is
which means that okay. So for the investment sake, we become the shareholders
correct.
eventually. Okay.
You are shareholder of the SPV anyways. The SPV is issuing you shares in demat form
Yeah, yeah, I understand that. I mean, I
that you
was
can
just
track on a
understanding
daily
the
basis.
segment wise.
Yeah.
Okay. Okay.
So here also we are looking at about 7 to 10 sectors. Again, the details of that will be provided to you.
Mm-hmm.
The next one is co-franchising. So the idea here is rather than investing into or acquiring stake into one franchisee, the fund is invest across 50 of the top performing franchises in India, basically to take advantage of the brand recognition and to
Mm-hmm.
ensure a consistent cash flow, also to reduce the risk. Because if you look at the portfolio, you will understand that mitigation of risk is not just across the portfolio, it's within the vertical also. जैसे रियल एस्टेट में ही डाइवर्सिफिकेशन है, आप एसएमई में आ जाओ, उसमें भी डाइवर्सिफिकेशन है क्योंकि वो सेक्टर स्पेसिफिक नहीं है. सेम अप्लाइज फॉर स्टार्टअप. को फ्रेंचाइजिंग में आओ तो ऐसा नहीं है कि हम एक या दो, एक मैकडोनल्ड्स में डाल दिया, दूसरा स्टारबक्स में डाल दिया, नहीं. उसमें भी 50 टॉप परफॉर्मिंग फ्रेंचाइजीज को देख रहे हैं. The whole
Okay.
idea is to mitigate the risk, reduce the
Mm-hmm.
risk exposure as much as possible.
Mm-hmm.
The next one, retail sector. Again, similar strategy, benefiting from the brand valuation. The sector would include hospitality. It will include health verticals, specialty boutiques. And the idea is to ensure a strong cash flow and scalable growth. So what all retail sectors are we investing into? That once the project starts, you will be receiving a quarterly dashboard, और उस quarterly dashboard में आपको पूरा update मिलेगा कि कौन-कौन से portfolio में क्या-क्या हो रहा है. That is why we
Mm-hmm.
provide you with a quarterly dashboard. Excuse me. The next one is developing of boutique resorts. Now, boutique resorts, they have the capability of generating high profits, not just through accommodation and dining, but also through, they have their health vertical, wellness vertical, destination events. And these are mostly in tourist locations. So here the idea is to take advantage of the strong cash flow, make revenues from hospitality management, plus the added advantage is that it's a physical real estate property. So the property value itself appreciates over a period of time. And the exit is marked either through buyouts. Ultra high net worth individuals, they like to own a resort or maybe just gift it to somebody. So it could be either buyout or it could be through public listings. Currently, the fund is looking to develop about 14 boutique resorts across the country. So the advantage is we are getting it at a pre-development stage. So it's not just the profits in the long run, but also the real estate appreciated value of the property itself.
So you mean to say that the profits from the boutique resorts are only through these buyout or public listings? It is not through running them?
Yeah, that's why I said it. If you notice the first paragraph, accommodation, dining, destination events, spas, all these are revenue generating.
Hmm.
The fact that it's also because it's a physical real estate property, the property value also appreciates, and at the time of the sale, the value will obviously be higher than where we started out. So
Okay.
basically, if you notice, every product has a different product cycle, but because it all comes in together, profits are generated from multiple sources.
Mm-hmm.
So this is basically the portfolio. This is basically the assets. Now let's look at the allocation of the portfolio. Fifth, so startups maximum 15%, SME and franchisees also maximum 15%. आपका हर 100 रुपए में मैक्सिमम 15 रुपए जाएगा. स्टार्टअप्स में मैक्सिमम 15, SME में मैक्सिमम 15, फ्रेंचाइजी में 24% into boutique resorts, 7% into wholesale real estate, 12% into project development, and 12% into retail. This is the approximate portfolio composition. Now, having said
On
that,
on what criteria have you chosen the maximum percentage, almost 25% to boutique resorts? What is the criteria behind this?
the criteria behind this is while boutique resorts is a capital intensive investment, because of the fact that these are in tourist locations that have identified a scalable growth, in the long run, it will not only generate revenue in terms of cash flow, but it'll also fetch higher prices at the time of sale.
Why not? But as you say that when we talk about startups, so you have already specified that certain examples where 1000% and more than that profit has come. I
Correct.
really doubt that boutique resorts would go fetch those kind of returns. Do you think that a
No,
boutique resort maybe prepared at a boutique resort, let's say a boutique property or a resort, I am just exemplifying. If a unit has been constructed at 10 crores or 100 crores of investment, can we returns of 1000%?
No, you're right. So you're right. A boutique resort does not have the potential or may not give you returns as high as startups. But having said that, we also have to evaluate the risk involved. Correct. We also have to
Yeah,
evaluate the risk involved
so
because in boutique resorts, we are talking about physical real estate assets.
no, so but that is also same with project development, no? You are doing it in terms of physical attribute of a project. So it is same for project development also. Yeah,
Correct.
right. So boutique
But
resort and project development, and what I understand, why I'm saying this is, one, I already belong to travel industry, so I understand how boutique resorts or these resorts and hospitality industry functions.
yeah,
So I foresee chances of generating profit maybe more if I'm just comparing project development and boutique resort, because HNIs would be less, and one HNI buying out or gifting out a complete project, a boutique resort, I don't know, it would be much lesser than somebody just buying a luxury flat or a villa, as you
I
said
just gave
about
an
Alibaba.
example. Boutique resorts, like I said, it could be either buyouts or IPOs. But having said that, project development, yes, you're right. It's also profitable. But then project development, we are looking at individuals alone. And
Can we, okay, so this capital allocation you have already, I mean, your fund already has that allocation based on certain data, right?
correct.
So you must have studied these stages, these assets you must have studied, and based on that data you would have allocated that this is going to be our
It's
allocation
going to be
capital.
the approximate allocation. Having said that,
So
the fund managers may increase or decrease the exposure based on the opportunity in front of them, which is why it is important that
how soon, how frequently is it done?
The update, you mean?
No,
Uh,
update as in, say, for example, you said the fund manager decides the capital allocation
hmm.
based on the prospect of that particular asset. So how
Yeah.
frequently is it done? Is it done monthly, daily? How is it done? How do you see? What I'm trying to understand is, in the end, our objective is to maximize the profit. Even
Correct.
if even if you find a certain project, let's say you and you. So what I understand that how mutual funds function is that on for a specific period you may allocate your total asset to a certain asset when you
Hmm.
anticipate that there is going to be the maximum profit coming in from that period,
Correct.
right? So I just wanted to understand that what are the premises on which you have made this allocations, and how what is the frequency of your fund managers doing the changes, or the variation happening in the allocation of these assets.
Okay. So that is something that I will come back to you with an answer for, because that is something the fund management team, the investment banking team will have to answer as to
Okay.
how frequently, but that is the reason why we give you a quarterly update. A quarterly update will exactly tell you the portfolio allocation, what are the new assets being acquired, what percentage is going into that, which is precisely why we share the dashboard with you.
See, dashboard, I would only be able to analyze the performance.
Hmm.
So what is happening? What I am trying to understand is that what is the premises of you deciding on. See, when I foresee, I would rather, my investment in project development and boutique would be something similar, and then rest 12% I would try to, if you ask me, I mean, I'm a layman. I would want to put that more into startups and maybe SME or a retail. Where right
Hmm.
now in India, if you talk about Indian market, so retail and startup is the two segment which is coming up more.
Yeah.
So coming from that perspective, I would want the my fund to be allocated into that. So that is why
Hmm.
I want to understand it on what premises you have decided this.
Yeah, we will give you that answer.
Sure.
Okay, I've noted down your question, and your subsequent session will be taken by our senior director Mayuresh Pawar,
Mm-hmm.
and I will inform him that this is what your query is, and he will come back to you on that. Okay,
Sure.
thank you for that question. So basically, there are 7 stages of wealth multiplication. It begins with asset identification, then comes doing the due diligence, which is basically assessing the feasibility, the potential of the asset, and then the asset restructuring and the investment negotiation happens. Then comes the stage of capital deployment, जहाँ पे acquire assets basically acquire करते हैं. Then the asset growth and profitability optimization, because this is not a fund that pays out in the interim. This follows the concept of compounding,
Mm-hmm.
369. And finally, the stage comes where the profits are realized and the exits are made. So the exit options also will be clearly discussed with you in the subsequent meeting. There are basically 2 exit options in a year, and you can choose in advance when to exit, and it will be done accordingly. So this is in a
And
nutshell.
these exit options come after 3 years of locking period.
Correct. After 3 years, it will be twice in a year.
Okay.
The reason we take 6 months gap is because we need to collectively know what is the corpus we are looking, how many customers are looking to withdraw, what is their amount, and then we need to liquidate accordingly.
Okay.
Okay. So that in a nutshell is the asset, the allocation, and the profitability rationale.
Sorry, Viraj. In this point,
Hmm.
uh, Viraj, I need to recheck one thing. Like as you mentioned, after 3 years we can take an exit and whatever you will evaluate. So, is this evaluation is is depending upon the how much profit it or a subtraction you are going to be have the organization have from the funds, or how it will work?
Your fund, at the time of you signing the equity agreement that Poshan Archana will explain in detail, there are 3 kind of returns. Okay, conservative. So we generally go with the conservative estimate. The conservative estimate would be around 35% per annum, and that will be
Mm-hmm.
incorporated into your agreement, and that is what you will expect at the end of 3 years. However,
Is
having
it is
said
it
that,
is it what you guarantee also, that 35% at minimum is going to be the return?
so Anmol, the thing is that we cannot use the word guarantee because SEBI prohibits us from using the word guarantee, which is why I'm slightly stepping into Archana's boundary here. This is what she usually explains. But
Okay, so this will
SEBI
something
usually,
which will we will get more details on second meeting.
right
Acha,
now.
acha.
So
Okay,
I am
okay.
done with my portion of presentation. Now,
Mhm.
when Archana will present you the charts, she will explain to you, and you will get clarity on how the returns are projected, how it comes as a part of the annexure in the agreement, all that she will take you through.
Sure.
Okay.
Okay.
Piyush and Anmol, having said that, I've got another meeting coming up. So
Mhm.
at this point in time, I'm handing over the presentation to Archana, and I look forward to seeing you again. Thank you very much.
Sure, sure. Thanks, Viraj. Thank you.
Thank you, Viraj. Thank you.
Archana, I will stop sharing now,
Yeah, sure.
and you may take over.
Okay, Viraj, thank you so much.
Thank you. Oh, by the way, I think, wait, I'll make you the co-host. Yeah, done, Archana.
Okay, thanks, Viraj.
Welcome.
So, Anmol and Piyush, now we have seen the presentation which actually defines the various segments across which your contribution is going to get diversified into.
Mhm.
Now I'm going to share the charts to elaborate on the numbers to help you understand the profitability of the fund, the exact proportion in which the diversification is going to happen across the different asset classes, and most importantly, the returns based on your contribution amount and investment schedule. So just allow me a moment. I'll do the screen share of the Excel charts. Yeah, I hope my screen is visible.
Yeah,
Yeah,
the
Archana.
first.
Okay, so
Yes,
first
correct.
sheet, what we are going to look into is the wealth and lifestyle goals. This is somewhat a slight recap of whatever we have summarized in the summit. In this sheet, we have shown that how this opportunity can impact your life and how you can leverage this 4 to 10 times wealth multiplication strategy to address the diverse needs across various aspects of your life. Like we have considered 6 different sample requirement categories, which a fund can target for you to choose the strongest match and the most relevant one which resonates with your life goal. The first category which we are talking about is passive wealth generation. Sorry,
Mhm.
Oh,
can
oh,
I
so
continue?
sorry. Yeah,
No, no,
please.
please,
I'm
please
so
go
Okay,
sorry.
ahead.
so
Yeah.
this is talking about your complete financial freedom after 6 years from now. While the maximum annual returns from any existing asset class as on date is not more than 14% annually. Due to early stage participation, our portfolio will offer 10 times wealth multiplication in just 6 years period. And then you can convert the maturity value, I mean the expanded capital which you receive, to any other asset class or rental model to generate a passive income which can help you in your day-to-day expenses. So like 1 crore, if you take a rough estimate, it multiplies by 10 times to be 10 crores by the 6th year on an average. The second fund which we are talking about category is the primary home fund. Suppose you have plans for a home upgradation. Even if you sell off your current residence, you will still have to go for a home loan to target the difference amount. Here we are saying that instead of that, invest in our portfolio. You will be actually getting 10 times wealth multiplication, which will help you to actually save yourself from the financial burden of the loan, which will take minimum 25 to 30 years, taking into account the inflation to pay back. So you just have to ideally target 10 to 25% cost of the new property as your participation amount in our fund. Third is the child wealth category. This is talking about how just you cannot manage the expenses, education expense, but also take care of the other lifestyle expenses of your kids. Suppose after they start their career independently, so that they can continue to enjoy the same lifestyle which you have given them today with their own small active income. Our portfolio offers 10 times wealth multiplication in 6 years, and you can convert the maturity value, the expanded capital, to any other rental model to support your kids in every possible way. Excuse me. Fourth is the car upgradation fund. Your car value depreciates by almost 50 to 70% in just a period of 3 years. To upgrade your car, you will have to target the difference amount. Here we are saying that instead of taking a car loan or using the maturity value of any other asset of yours, simply contribute to our portfolio to get 2 to 10 times wealth multiplication in just 6 years. Fifth is the farmhouse or vacation villa fund. This is talking about you targeting a vacation villa or a farmhouse very close to your primary city by contributing only 15 to 25% of its price with us for 6 years. Six is the business setup fund. This is talking about you creating a parallel business income source if you are self-employed or a salaried professional. An early stage investment opportunity, as we have seen in the presentation, is actually a business opportunity in disguise. Even if you are a business owner, it's always wise to create a source that creates the same income, passive income, that matches your current active income. This will not only shield your business during critical eventualities like economic downturn, sudden competition, natural calamities, or pandemic, but you can also plan your business upgrade with ease using our portfolio. In this sheet, this chart shows a yearly return on investment comparison between the other existing late stage assets like mutual funds, direct stocks, conventional residential properties, fixed deposits, gold, etc., with our portfolio on a basis of rentals, appreciation value, and profitability. The passive income generating capacity of multi-estate ready to move in ownership is almost 350% higher than conventional property assets. And it is almost 1400% higher than mutual funds. So contributing to our portfolio will be obviously far more profitable as compared to investing in other existing options like other properties, conventional residential properties, fixed deposits, gold, etc. Now, this is the capital allocation and earnings sheet. This sheet is calculated assuming a one-time contribution of, say, suppose 1 crore and an investment period of, say, 6 years, shown in multiple of 3 years, to help us explain the diversification of your contribution across the various segments which are targeted by our portfolio. This is showing your capital allocation across 7 different early stage classes and their maturity values in 3 different estimates. First is the conservative estimate, second is the realistic estimate, and the third is the current trend based estimated figures. Although we will be using the conservative figures only in the charts that we will be attaching as annexure to your agreement, but just to give you a fair idea about the upside profitability and potential that we are targeting, we have also used the realistic and the current trend figures. Of the 7 different asset classes which you just saw in the pie chart, capital allocation across boutique resorts will be maximum of 24%. 15% each will be allocated to startups, SMEs, and co-franchisee segment. 12% each will be allocated to retail and project development segments. And allocation of 7% will be done across wholesale real estate. So like 1 crore splits in proportion of...
Archana, I'm so sorry to interrupt you in between.
Yeah, sure.
Actually, I have to join one more call. So you may continue with Anmol, and if I will be available, I will just join the call.
Sure, I will try to share the recording with you, sir, so that you don't miss
that
out
would be
anything.
great. That would be a great,
Okay.
yeah.
Sure.
Thank you. Thank you.
So,
Thank you,
can I
Archana.
continue? Yeah.
Thank you,
you,
Anmol.
sir.
Yes, please. Please, Archana,
Okay,
yes,
so
continue.
like 1 crore, if you are taking as the investment budget, it splits in proportion of 24 lakh across boutique resorts, 15 lakhs across the startups, SMEs, co-franchisee segments, 12 lakh across retail project development, and 7 lakhs across wholesale real estate. If you observe the realistic column, maturity values, it is clearly evident that as compared to conservative estimates, we are taking into account the realistic picture of almost 313% plus in the wholesale real estate segment, followed by 50% plus in the multi-brand franchisee segment, and almost 25% plus across various other segments. So on an average, the total returns in the realistic consideration will be almost 45% higher as compared to the current conservative estimate. And in current trend estimate, it will be almost 85% higher as compared to the conservative estimate. Now, on the other side, as compared to conservative estimates, if you see the current trend column, maturity values, then we are taking into account the current trend picture of 150% plus in the startup segment, followed by 100% plus in the multi-brand franchisee segment, followed by 75% plus in SME segment, and almost 50% plus across all the segment. These estimates are clearly indicative that we are expecting maximum growth in the wholesale real estate segment, followed by multi-brand franchisee segment, and then followed by SME segment. So that's the power of diversification of your contribution across all these segments. This will be under the expert guidance of our investment panel members and advisory board members. Like your contribution between 25 lakh to 5 crore will fetch the returns which ideally a 500 crore investment would have fetched. Of course, in proportion to your investment value. This is because of the power of the combined contribution in the SPV. So, with diversification of your contribution, your net asset value, which our portfolio generates on a 1 crore investment amount, say for a period of 6 years, is between 4.5 crores to 8.75 crores. So you can yourself understand the stark difference in profitability as compared to fixed deposits that would ideally in 6 years period generated a return of only 54 lakhs at the rate of 9% annual returns. On mutual funds that would have generated a return of only 96 lakhs at the rate of 16% annual returns.
Where is it mentioned,
In the last
Archana,
two
somewhere?
columns, sir. The
Last
last two
two.
columns.
Okay.
I'll be
Okay.
sending this Excel file to you. You can have a look
Maybe.
at each and every figure, sir. And in case you have any queries, you can call me back.
Sure.
So, like, sir, in what I'm trying to say is, Auspice Ventures Private Limited is going to manage your entire wealth multiplication journey on your behalf. Like, we have combined promoter and senior management experience of more than 300 plus years. And we have a world-class research team that identifies early stage profitable opportunities across the various asset classes. We have a highly competent investment advisory team that evaluates all the assets and their profitability potential. This experienced team has already achieved 5,000 plus crores of successful exits previously. And we also have a global legal team that secures multi-assets profitability and exit through regulatory legal structures and governance. And like for a previous model, sir, we have thousands of delighted clients who are on their path to the superlative wealth multiplication
Yeah,
and
that
lifestyle.
that will also be my maybe once
Yes,
you are through with
yes,
the
we
sessions, I
can
would
connect
like
you
to
definitely,
understand.
sir.
Correct.
Yes.
So
After
see,
at the subsequent
if
stage, sir.
I'm sorry, yeah. So Archana, my question, what I asked Viraj also remains same. If you see this Excel also, you will see that startups are giving 700% of ROI over 6 years, whereas the boutique resorts are giving 450%. So if I just switch over my 24 lakh from 1 crore to say startup, my profitability would be far more.
Sir, but then in that case, you also have to keep into consideration the risk is to reward ratio. Like
Yeah.
profitability is very high, but risk is also very high. So like when we are giving you, like I will show you the chart which is going to follow in the next sheet or maybe after that. That
Mm-hmm.
will be as the proof that we are assuring this figure. When we say
Mm-hmm.
33%, that means it's a bare minimum conservative figure which has to come to you. And
Mm-hmm.
as a see, although as per SEBI, we cannot use the word guarantee anywhere
I
in our
understand.
income charts or agreement, but the
Mm-hmm.
very proof that we will be publishing this chart along with the agreement which happens with you in the
Mm-hmm.
MCA portal as a process of issuing the demands to you. So
Sure.
we cannot commit any absurd figures which we will not be able to deliver. So
Yeah,
that is
yeah.
the proof that you will give your principal is also secured and the minimum conservative returns we are assuring of 33% that is also assured.
Mm-hmm.
I'll show you in the charts that follow, sir. Now, this is the targeted wealth and lifestyle fund sheet. This is a draft illustration to help you understand your specific contribution towards each of your wealth and lifestyle fund. So you need not consider all the 6 different sample categories which are shown here in column 2. These are shown just to give you a fair idea about all the areas which a fund can target for you to choose the strongest match which resonates with your life.
So
Column 4.
does this means when you talk about these lifestyle um you know charts, it basically you are trying to highlight here that by investing in the wealth multiplication fund, I can fulfill any of these requirements.
Yes.
from my, correct? And
The
then you just,
contribution is one only, sir. We are trying to show the various areas in your life where you can use why you should invest. That is the basic reason. Which all are the areas in your life which a fund can target for you.
I understand that, yeah.
Okay. So column 4 shows the targeted amount which is required as on date for an asset purchase. Column 5 shows the asset purchase price after 3 years, taking into account the annual inflation between 7 to 15%. Now,
Which is
column,
column 4?
sir, first column is highlighted in green. Second one is the lifestyle facets. Third is the unit. Fourth is the targeted amount. And
Uh,
fifth one, value of the targeted asset after 3 years.
okay. This is column 4. Column E, basically, you are saying.
This is the column 5, sir. Value of targeted asset after 3 years.
Okay. Okay.
Okay. Now column 6 and 7, they show the existing value of an asset which you must be currently holding that you wish to
Mhm.
upgrade. And its
Mhm.
new value, I mean, its cost after 3 years. For
Mm.
instance, we have taken the example of a car. We have not taken it for all the categories.
Mm.
We've just shown it for a car.
Correct.
The car value, it depreciates by almost 16.67% annually, making it over 50% for a period of 3 years.
Mhm.
Now, in column 8, we have shown the depreciated value of your asset at the end of 3 years. Except for a
Right.
car, we have not considered any other asset because suppose you have a property, you may not want to sell it off, instead retain it for future use.
Correct.
Now, column number 9, which is new fund value required to fulfill the asset.
Mm.
Now, this is actually showing you the difference in value of the targeted asset and the present value of your currently owned asset after a period of 3 years.
Mhm.
And column 10, which is highlighted in green, this is showing you the fund value contribution, which is just 25% of the value required to fulfill the asset purchase at the end of third year, which we have shown in column 9, previous column. So what we are saying here is ideally just target 25% of cost of any asset you want to have at the end of 3 years as your participation amount in our portfolio. Now, this is 25% based on the conservative 4-time wealth multiplication. If you consider the realistic and the current trend-based picture where we are expecting 10 times wealth multiplication, you just have to consider 10% of the value as the participation amount. And in the last 3 columns, we are just showing the monthly contributions for a period of 12 months, 24 months, and 36 months period. See, the shorter the investment time span, the higher will be the maturity value for the same amount.
Mm.
Now, this is the earnings chart summary. This sheet is very important because based on these returns percentages, the maturity value of your investment will be calculated. Now, instead of a single contribution, if you spread out your contribution over 12 months, which is 1 year, 24 months, which is 2 year, or 36 months, which is 3 year, the monthly payment amounts are shown in the initial 3 columns.
Mhm.
Now, the increase in step.
What do you mean by 12 months SCP?
12 months is, suppose you are targeting to invest a sum of 25 lakhs. Now,
Correct.
if you spread it out over a period of 12 months, so what is your monthly contribution amount? That is
Okay.
shown in the first row, first column.
Okay.
Then in the
Okay.
next one, if suppose you want to spread, it's simply divided by 12, divided by 24, divided by 36.
I understand. Okay. Okay.
And this increase in the step per step is by 25 lakhs for up to 1 crore.
No, but it is not going to happen this way, na? Because you are going to take 25 lakhs in one go, or you are allowing me to invest it on monthly basis also.
Yeah, that I will clarify in the sheets that are following, sir. As of now,
Okay.
just to give you a fair idea, from 25 lakh to 1 crore, the increase in each step is of 25 lakh. And from 1 crore to 5 crore, the increase in step is by almost 50 lakhs.
Mm-hmm.
The last 2 columns, which are highlighted in orange and green, that is the yearly base return rate and the preferred bonus rate of each slab. This we are going to refer for the calculations.
Okay.
Now, this sheet is very important because this will be attached as an annexure to your agreement. In all the earnings roadmap charts which are going to follow, whether it is single contribution 12 months, 24 months, or 36 months, we have only taken into consideration the conservative estimates. Now, why so? Because see, as I told you before, the word guarantee cannot be used anywhere because SEBI doesn't allow us to use that word in our charts or agreements. But we'll be publishing your agreement with this chart along with other documents like VT14 form, which our company secretary will give, and the board of resolution of the SPV in the MCA portal as a part of issuing your demands. So it's clearly indicated that we will not commit any figure which will not be able to deliver. And this is the basic reason why we are using the conservative estimates instead of the realistic and the current trend ones, which I just
So
discussed
this,
with you in the
so this,
previous chart.
so this gives a CAGR of 30.65%.
Yes.
Okay.
Now, this chart shows the earnings roadmap for 6 years in multiples of 3 years in case of a single contribution. Now, what do I mean by single contribution? It is either somebody has the bandwidth and he puts the entire amount in one go. That can be considered single contribution. Or second option is a person puts the entire amount within 11 days from the third day session of discovery session. So in this case, the profitability generated is maximum. And why so? It's because you are flatly securing the returns percentages on the entire amount invested. See, for 1 crore, the return percentages annually is 41%. So for 3 years, it's 123%. So 123% on the entire 1 crores for a period of 3 years. Because 3 years is the lock-in. You cannot exit before that. So that is how the profitability generated is maximum. And in this case, you can see the net asset value is 2.23 crores at the end of 3 years. And CAGR comes to be 30.65%. Now, you have to note one thing, sir, the contributions of 25 lakh, 50 lakh or 75 lakh has to be completed within 3 months time frame. Investments of 1 crore and above can be spread out across 12, 24 or 36 months. But in that case also, an investor has to complete his initial 25 lakh within the 3 months time period.
Okay.
Now the same amount and the same return percentage of 41%, how the profitability decreases if a person is supposedly spreading it out over 12 months, that is explained in the next sheet. This sheet shows that when you are spreading out, your profitability is decreasing. Here you can see at the end of third year, the net asset value is only 2.04 crores. So unlike the single contribution sheet, the profitability generated here is simply not obtained by multiplying the sum invested into the return percentages. But suppose you consider a 1 crore amount, somebody is planning for the systematic investment in 1 year. So his monthly EMI will come like around about 8.34 lakhs. And the preferred bonus rates 41 divided by 12 monthly return rates will be 3.42%. So what we do in this case is we multiply with the EMI value with the monthly return rate with exactly the number for which the amount is going to be in the fund. So for the first month installment, that amount will remain for 36 months. But for the second month installment, that is only going to remain till 35 months. For the third month, it is going to be 34. And for the 12th month, it is going to be 25. So net asset value of each EMI is calculated separately. And the complete net asset value of the entire contribution is found by adding the individual net asset values. So in this case, you can see the total net asset value comes to be 2.04 crores instead of 2.26 crores. And even the CAGR is 26.87%, which is lesser than 30 point something, which we saw in the previous sheet. So drop is almost by 4.36%. The scenario gets even worse if you proceed for a 24-month contribution, because in this case, you can see the net asset value is only 1.85 crores as compared to 2.23 crores of a single contribution. Although amount is same, return percentages is also the same. And here you can see CAGR is only 22.76% as compared to 30 point something in the single time contribution. So your drop in CAGR is almost by 8.47%. And similarly, if you spread out over 36 months, your NAV is only coming to be 1.63 crores instead of 2.23. And your CAGR is also only 17.74%. So drop in your CAGR is almost by 13.49%. And for these three options, 12 months, 24 months, or 36 months, for the next cycle of 3 to 6 years, the returns are calculated as we do in case of a single contribution. Whatever is the maturity value at the end of third year, that we simply multiply by the returns percentages for 3 years. Now, also here is the summary of whatever I have said. This sheet is giving a comparative analysis of how the net asset value changes if you spread out your investment over 12, 24 or 36 months as compared to a single contribution, and simultaneously the decrease in the maturity value and CAGR, of course. This sheet also presents an upside profitability with realistic estimate of 45% higher and current trend estimate of 85% higher. So you can clearly see in a period of 3 years, 1 crore investment is expected to multiply to 2.23 crores to 4.13 crores. Even for the minimum ticket size of 25 lakhs, it is expected to multiply to 50.13 lakhs to 92.73 lakhs. And in 6 years, suppose somebody continues to stay invested even after completing his lock-in for the next 3 years,
Mhm.
1 crore is investment is expected to multiply to 4.97 crores to 9.20 crores. In case of 25 lakhs, it will multiply to 1 crore to 1.86 crore. So although a person can exit in 3 years, the maximum profitability is in a single contribution with an investment span of minimum 6 years. And
Hmm.
suppose you continue till the 9th year, 1 crore becomes whopping 11.24 crores to 20.79 crores. For 25 lakhs, it will be like round about 2.04 crores to 3.78 crores.
In 9 years.
Yes. So
Okay.
this till here we have seen that how the contribution time period, if you squeeze within 11 days, your profitability is increasing with the same returns percentage. Now, to increase your profitability even more, there are some additional offers also which we are giving. If you pay your intent participation of 51,000 within 24 hours after the third day of discovery session, you are freezing the current return rates. I mean, the rates are obviously going to reduce with time. So if suppose you pay your intent participation, you will freeze and lock these rates. So your returns will be calculated on the basis of these rates only. In future also, if you top up your investment with further contributions, still these high rates will be applicable irrespective of the rates that are offered at that time. The preferred bonus rates, which you saw in the earnings summary sheet, they are 1% extra as compared to the base rates of the same slab. As per our current offer, a person is entitled for these if his contribution of 15 lakhs comes within 4 days after the third day meeting of the discovery session. In this case,
Mhm.
we are also offering an Apple iPad as a token of appreciation for early participation. Now,
Mhm.
the next contribution of 10 lakhs, a person can invest within 11 days from the third day of discovery session. In that case, he is also entitled for the next higher slab base rates, which is
Mhm.
2.5% extra as compared to
Hmm.
the base yearly rates.
Hmm.
Alternatively, suppose you have the bandwidth, then you can put the money. If you complete your investment within 5 days from the third session, you are entitled for the next higher slab preferred bonus rate, which is 3.5% extra as compared to the base return rates. Now, sir, these extra percentages of returns looks very small, but it makes a huge difference in maturity value over a period of 3 years or 6 years. So how does it affect? I'll show you the figures. In this sheet, you can see if someone, suppose before sharing the figures, I also want to add, if someone doesn't want to avail the additional return rates, still it is expected that he pays the initial contribution of 51,000 within the 24 hours after the third day, and the remaining within maximum 25 to 45 days. Suppose somebody has some problem and wants to stretch it, maximum we can stretch it up to 3 months time. And that too
Okay.
also with the initially a customer is investing a token of less than 15 lakhs, depending upon his availability.
Mhm.
Suppose you want to proceed with 25 lakh, you don't have the availability as of now. You can proceed with whatever token you want after 51,000, and then it can be stretched up to 3 months. See, the quicker the investment is completed, the more beneficial it is going to be for you. Not just
Mhm.
because of these offers, but also because the NAV is directly dependent on the tenure of investment, as we have seen in the earnings roadmap sheets.
Correct.
So, in this profitability dashboard, if you take the benefit of the promotional offers and can secure the preferred bonus rates of the next higher slab, then on an investment of 1 crore, the difference in the maturity value over a period of 3 years will be 10.50 lakhs to 19.43 lakhs. And in 6 years, this difference will be as huge as 47.93 lakhs to 88.68 lakhs. For 25 lakhs, if you talk, sir, the difference in the maturity value in 3 years will be 2.63 lakhs to 4.86 lakhs. And in 6 years, it is going to be as large as 10.80 lakhs to 19.98 lakhs. So that's all about the figures, sir. Now I will stop the screen share and you can
Mhm.
ask me any questions if you have. I hope these charts are clear to you.
See, charts are always projections, right? So
I'll be
so
sending you a
these
copy, sir. Just go through the formulas and it's all connected.
no,
Like
I
you just
understand.
have to change your
I
contribution
understand.
amount.
So what I need to understand. See, one, I understand that as much. I mean, when we talk about mutual funds, so when we are talking about cumulative profitability, it is always based on that. That if I have an EMI or what you call those monthly equated things
Yes,
invested in mutual funds, so cumulatively, uh, smaller the fund, I will only be able to purchase that NAV only, and whatever that NAV is, that will be based on that. This is number one.
yes.
What I need to understand when you are first is that I need to understand what has been your success path till now when you have launched this as a project,
Yes,
this
of
as a
course, sir.
product.
There is a protocol. Like we actually do connect the new customers who want to have a feedback from our existing customers, although they are into a different model. Like Ospace has started from 2015. This is our 11th year running. And
Mhm.
initially, all these years, we have been into asset restructuring, facility management, rental management. But those portfolios are still going on, and we have thousands of happy customers pan
So
India.
I just want to understand that is this the latest product which you have offered to
Yes,
me?
this is a new fund, sir, but the fund managers are very experienced.
No,
You
no,
can
I understand
absolutely be
that
confident
this is
about
a
their.
new fund. What I need to understand that, what has been your success journey in terms of whatever products, because I understand that, every organization evolves. So maybe whatever product you would have designed in the very first year, and now you have designed this product, it would be based on your experience. It would be based on certain parameters and assessments which you have done. That is why I made that question, that why are you investing 24% in resorts and not in startups or wherever? Because in any case, I am taking risk for the whole of the thing. It is all about taking calculated risks. And then when you are pitching in, making it workable, not believable, I would say workable, because you also know that these are certain. So what you have done is you have ascertained that these are the seven segments where if we will invest at the right time, we will be able to maximize our profits, right? Otherwise, we have been doing our investments in some or the other, all from all these allocations only, but in some or
Right.
the other way. But this is like a cumulative thing, like a mutual fund goes in. So all
Yes.
I need to understand is that whatever products you have designed, what has been your success path, and the other question which I made. So and when you say that so I would want to start with a minimum investment of 25 lakhs only, right?
Right.
So that has to be accomplished in next 3 months itself, correct?
3 months. So initially,
So,
sir, you have to proceed with 51,000 token as your intent participation. And to
hmm,
have that time frame of 3 months, we would recommend a small contribution as small as maybe 5 lakhs or 10 lakhs, whatever is convenient to you for the as a first time, because that investment will be going directly to Exotical.
I
There are two more
understand.
important things which I want to add on, sir. For the initial 3 months, there is going to be an incubation period when the fund managers will allocate your fund across the various assets. And in this time, your agreement signing will also happen, and also your DMAX processing will be done. So there is a 3 months moratorium period which has to be considered. From the fourth month, yes, the quarterly dashboard will start for the coming 3 months. And second thing is, even at the time of exit, there is a 90 days protocol. Like you will have to submit this DMAT shares to liquidate it to Ospace. And then we'll be processing your exit in 90 days. But till the time
90
your
days.
yeah, till the time your investment is in the fund, we will continue to consider the returns on the basis.
No, but this way, so this way, okay. So when I say, let's say if I tell you on 30th of June that I
Yes.
want to exit,
Because just as we issue your DMATs, it's a 3 months process because your documents will be passing through the ROC and MCA portal, and there is a long process which happens. But same happens at the time of exit also. You have to hand over and to liquidate this. Again, we have to approach it is to
but
pass through
when I
ROC.
have I have other mutual funds and other investments, they get liquidated in 48 hours.
But then that you are not the owner. So in our case, you are becoming the owner of the SPV in proportion to your investment. That is a
Okay,
simple, buying mutual funds and all is different. You will be
okay,
understanding in details about it tomorrow in the session. My
okay.
sir is the right person.
Sure,
So
sure.
in this
Maybe,
case, you are
maybe
getting the
less.
ownership of the company in proportion
I
to your
understand.
investment.
I understand. Yeah. Okay, okay. Then let me first
And
go through
in
all
this
the.
case, so we can absolutely, all the securities session is coming up tomorrow, but I heard your question. What
Mhm.
slight doubt I have is you're having your principal security concern also. So let me tell you, sir, when you will be investing in the SPV, the SPV is structured purely for holding the assets, and your funds are directly going to be linked to the underlying real estate assets through equity shares. So suppose you, God forbid, you say SPV ceases operation, still you remain the legal shareholder of the assets and are protected under the Companies Act, and
Mhm.
also ensuring that your stake remains secure. Even in this case, the ownership of the asset doesn't get dissolved.
Yeah, so I just need to understand, the participation and allocation, as I asked Viraj, that what are
Yes.
the premises that you do that, and then what is the frequency that you change
Right,
the
all these
allocations?
reports and these presentations, sir, we have actually designed and formulating it as per the guidelines of the fund managers. So, like after you pay your intent participation, we will be sharing the AIF docket also with you, which has the details of each and every investment panel member and advisory board member, and you can check for yourself that these are very credible person, very renowned personalities who have actually been into this field for many
I
years.
understand. See, I have been exposed to wealth management and
Right,
how it has been. So I think this is sort of wealth management, how it functions. And
right.
to be honest, I also need to understand, maybe as you said that the FAQ, my questions would come up once I'm through
Yeah,
with these
sure, sir. On the
sessions,
third day,
because
we will be answering. Correct.
yeah, because maybe there is a possibility that I'm asking something which you may be answering tomorrow. So that is why I'm parking my questions right now, and then I would understand that how it is to be done.
Sure, sir. So today's meeting was purely to elaborate on what kind of assets the portfolio is going to
Sure.
invest into and what is the composition of allocation across the different assets and your
Correct.
profitability. So tomorrow in the second stage, sir, we will have a senior director, Mr. Maresh Pawar, and my colleague, Ms. Reshmi, who are going to
Mm-hmm.
discuss the securities and the taxation part of your participation. So,
Sure, sure.
I'll be sending you today's presentation and the charts we discussed on your WhatsApp, mentioning a 25 lakhs bandwidth so that the figures are relevant to you and more
Correct.
realistic.
Correct.
Yes.
Correct. Yeah.
Okay.
Okay.
Having
Thanks,
said that, sir,
Archana.
I would like to conclude today's session. Thank you so much for giving me a patient hearing. Have a
Thank
great
you
day.
so much. Thanks. Thanks. Good day.
Okay, sir. Bye.